Yo, what's up, my wonderful family and profits? Sage Tino here. All right, so today I've just a messenger sent to deliver a special type of an order book that you need in your trading strategy, right? I will give you this time to actually relearn everything that you've been taught about order blocks and be ready to receive this one. It's a massive one, right? So let's get straight into it and you learn about it. And believe you me, you like this one. You like this one, right? Okay, so before I explain it, let me just show you something here, right? The order block that we're going to be considering, or the order block that is highly profitable that you can ever use, comes in this way, right? Say that your market has created a high like this, right? After creating that high, price is to sweep liquidity. Say this is a high of a candlestick, right, that we assume to be the last candlestick, but before price actually goes to the down direction, before it continues to that direction, it comes back to that high, right? They sweep some liquidity above that candlestick, right? Then they are going to move down, right? Then they are going to come back to that zone. Then we're going to move like this, right? Take this as candlesticks, right? This is not the price action, just take this as the candlestick, right? So this concept, I'll come again and I'll explain it further, right? Because if you look at it, if you know your SMC, or if you stayed on this channel, you understand that this is an AMD, right? In this phase, we're in an accumulation phase, then we are in a manipulation phase here. From manipulation, we go to distribution, right? So after seeing that distribution, we just wait for price to come back, test that zone, then you get to trade, right? So wait patiently, I'll explain this further and you get to learn more about it, right? So if you're new to this channel, guys, remember to like my videos, right? Remember to share with your friends. Also remember to subscribe. It's very, very important that you subscribe, become part of this community, and work together, right? Okay, so let me explain this part a little bit further, right? Let me explain it a little bit further. All right, so what is happening here, right? We are actually having a bullish, we'll actually be having a bullish candlestick. Say that bullish candlestick is this one. I'm not so good at art, so forgive me. And it is a high like that, right? This is the order block, right? This is what we know as an order block. This is what many traders know as order blocks, right? Price will be coming from a lower price all the way to that high, right? The last candlestick, they told you, or they told you that the last candlestick that you're going to see, right, before price turns, that's the order block, and you're going to mark that, right? But I'm coming and I'm saying, no, you guys, you should consider order blocks that comes in this manner, right? This is our last bullish candlestick, right? After this bullish candlestick, we have that bearish candlestick, right? But what we want on this candlestick, before it actually goes down, before it becomes a bearish candlestick, it is to sweep this liquidity. There is some liquidity that is lying above this candle, so they should give you a wick that goes above this high like this. So they sweep the liquidity that is above this high, then they go, right? So guys, this is the special order block that you have to learn and that I'm going to explain in this video. So what you're going to do, you're just going to mark the high of that candlestick, you mark the low of that candlestick, then you wait for your price to come back to mitigate that order block closing the FVGs, then you're going to go down. This is the special concept that I'm bringing to you. So let's get straight to the chart and I will show you a couple of examples that you need to use with this concept. Okay, so for examples, I'm just going to take the trades that we actually took in our premium groups this past week, right? I will show you, like this example, this is USDCHF, right? This is a trade that I actually took, right? The structure, I actually got it from the indicator that I put on the previous videos that I actually gave, right? From today, you can actually refer to those ones and get to learn about it and how to effectively trade on the corrective moves, right? Okay, so on this trade, this is what happened, right? We actually got our church there. It was clear, we're given by that indicator, right? We got our church there, sign of a reversal. Then after that, I was looking at my imbalances, right? If you look at this very point, I had imbalance that was lying here. So I intended that my price comes and close this imbalance, right? Then if you zoom a little bit, you will actually realize that the very order block, right, that I was explaining after the close of this FVG, this is what I'm having, right? This last bullish candlestick, right? The following candlestick that came after that one, right? The bearish candlestick that we have, firstly, what it did, right, it opened there, but before it moved down, it first also went up to sweep liquidity that was above this candlestick. So when price was actually coming back to this zone, I was very confident of this order block. Then I gave this signal, look at it, right? I gave this signal, the signal platform, and people took it, right? I missed the trade from this point, so I actually had to wait for it around these regions. You can look at the price that I gave in the signal group. So I took the trade from there. Then I was a little bit late. my entry was around this zone, right? But well, the signal was here, right? Yeah. Then we took that trade. Already it's something like 54 pips now, and we're still holding it up to next week. So this is the first example that I have for you guys. Look at how it works. Very accurate, on point, right? So let's look at another example of another trade again that I'm still in and I'm still holding, that came on Euro JPY, to see that this bearish candlestick, this order block, took some liquidity for a year. From there, let me just magnify this so that you see. If I put a magnifying glass there, you can see that above that last bullish candlestick, there is a wick that came that went above that bullish candlestick. So it took liquidity from there, then it started going down, right? So that makes that first bearish candlestick a very, very effective order block and good order block to use, highly profitable. So when I see my price coming to that order block, boom, I went straight into the trade. And now you can actually check. That's a screenshot of the trade that I'm still in and I'm still holding, hoping for more profit. It actually has to drop all the way to these lows, right? Cover these imbalances given by the indicator. Those imbalances covered by that, then I will take my profits from those zones. So it's a swing trade. I'm still in this and I'm still holding, right? Then there is yet another trade that I actually took from that concept again, that was on CADCHF, right? So on CADCHF, I had a setup that actually came right on H1, right? So my setup actually came on H1 like this, right? This is the setup. It's very, very simple, guys. I don't waste my time to analyze this. Like I showed you, my indicator just gave me this, right? So just go back to that video which talks about this SMC indicator, right? You get to learn about it, right? You appreciate it, back test it, then you get to use it together, right? So straight to the trade. After my BOS, I waited for my price to come all the way to these highs, right? On M30, it wasn't so clear. So on H1, so it wasn't so clear, right? So what I did, I went to my M15. If you look at what happened, let me do this so that my screen becomes bigger so that you see. This is what I'm talking about. So let me zoom a little bit back to this point, right? So I got my bullish candlestick. This in the concept, according to what you were taught, what you should actually learn to learn this, right? This is what you're taught. You're taught that this is your bullish candlestick and that is your order block. This one, this is very big. This last bullish, no. And I'm saying no. An order block is not the last bullish candlestick, but it's that very candlestick at the turning point which actually takes liquidity from the previous candlestick. This one, right? So this bearish candlestick is a bearish candlestick, but when it opened, it started off by going up, took liquidity from this bullish candlestick, went up close below. So I take that as my order block, and it's the most effective order block that I've ever seen when I started trading up to now, right? So straight away, my trade came into that zone and I took the trade, and we are still in profits. Again, I haven't actually closed this trade. We're still in profits and we are holding, right? So I think you can see how effective this concept is, this approach on order blocks, right? Ignore using the order blocks that we taught, right? That is just the last bullish or bearish candlestick without a reversal. No, right? Let's correct that. Let's use this one. Let's use this one. Then the other tip on using this concept, right? You don't necessarily have to go to lower time frame for your confirmation, for a lower time frame charge. With this concept, you can simply enter the trade the moment they tap your order block. The moment price comes and taps the bottom of this order block, the moment they come and tap this bottom, the moment they come, tap that bottom, you take your trade. But there is a condition for that. There is a condition to that. The moment they come and tap, even before some rejections. But if you want to take to reduce your losses to that, you can actually wait for some rejections or the first bearish candlestick that you see on that very time frame, right? What you should actually do, the only tip to that concept is you always have to maintain your stop loss at 15 pips. If you look at this trade, right, my risk on this trade, I believe it was less than 15 pips. Let me just check, right? It was just 10 pips. Look at this. It was just 10 pips, right? Then the other trade that I actually explained, USDCHF, right? This one, I believe it was also, because that's what I use on this concept, right? It was just 9 pips. Imagine 9 pips. That is a very, very small risk that will allow you to increase your lot sizes for more profits, right? So it was just 9 pips. Never allow your risk to be more than 15 pips. If it is more than 15 pips, then it will be more than 15 pips by just 2 or 3 pips, right? Just give room for that, right? So I will give you a bonus signal before I actually leave this session, right? So let's go to a pair that I'm anticipating to trade on Monday. I've already done the analysis. I'm anticipating to take this trade on Monday. I'm anticipating to take this trade on Monday with the same approach, right? So you send me your results as the week proceeds. So we actually got a BOS here, right, from our indicator. Boom, look, it's just the indicator there, right? We got our BOS. After getting our BOS, we realized that there was some imbalance there. This imbalance had to be closed. So there was no reason of us taking a sell from here because this had to be closed, right? After this is closed, there are two options here, right? Let me zoom so that you see clearly. There are two options. If you look at this is actually a bullish candlestick. So if you look at it, if you actually magnify from that, you can actually see that it took some liquidity there. Doesn't matter if it is just a small wick like that, but it took liquidity from that, right? So that makes me to get interested with that very order block. So what I'm just going to do, right, I take that order block, right, all the way to its high like that, right? So I'm expecting my price to actually sell from this zone. So we are already in the selling zone. This is condition number one, right? We are already in the selling zone, but since prices are already up there, I'm not going to put it there. I will put it somewhere like that, then limit my risk to just that so that it's below 15 pips. And on Monday opening, my price is still playing around this region. I'm going to take a sell from that. That's condition number one, right? Then I'm also learning that if I look to my left, right, this last one, this is also a significant order block that I'm actually explaining this concept, right? You can actually realize that this is a bearish candlestick, but the last bullish candlestick, it took liquidity from the last bullish candlestick that all of you think is the order block. So they took liquidity, they went up first, took liquidity from here. So since liquidity was taken there, I can consider this as what? As an order block to use. It's actually an effective. I know for a fact my price is going to reverse from that point without doubt, right? So let's look at it, right? So I'm expecting to take my sales from here, from there, right? So if I'm going to use that zone like that, it means I come to the bottom of that wick, of that candlestick, right? I don't consider the wick the bottom of the wick that I intended to use here. Why? Because the risk is too big. So I come where the candlestick closed, the close of the candlestick, and I will reduce my risk to that. It's becoming better, right? So currently it's now around 25 pips. Still, it's not in the range that I actually like. It's not in the range of 15 pips, right? So the other thing that we can do now, since the risk is still high, you just drop to your lower time frames, go to your M50, then you look at that zone again, right? You look at that zone again. So if you look at that zone, you are going to realize that we have some FVG, then this looks like liquidity. So you're most likely going to tap that zone, right? So I'm going to reduce that risk using my lower time frame, but here I'm no longer considering the order block. I'm just reducing it so that it goes around 15 pips like that, right? So this is what I just do, right? I neglect looking at the order block. I just reduce it to that. This is what I do, right? Then I go back to my H2 like that. So these are my two conditions, right? So this trade, I'm going to risk something like 11 pips, right? If this trade fails, then I know for a fact I'm going to take it and win on this very opportunity, right? They have to grab some liquidity there, close some imbalances that are there, come to this zone, they tap that zone. I'm going to take the trade. I don't even wait for lower time for confirmation. I just enter and put my stop loss and I chill. This is how I give signals, guys. So guys, thank you for watching this video. Remember to leave a comment in the comment section. Remember to share the video. Also remember to subscribe if you are not subscribed.